This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back. This is Not Your Advisor with NYU Grad on Monday, March 10th. Hope you all had a great weekend. Let's jump right in. The Qs were down 3.8% today. Tesla was down 15%, and MicroStrategy was down 16%. That's all I really have, folks. That's my train. I'm just kidding. We're going to go deep dive. This was sell-off from bell to bell. I had 0 trades today. I left all of my positions on the table. I have my core safety stocks and my core bearish positions. I just watched. I read, and there was in the markets there wasn't much panic, to be quite honest with you. But around my friends and network, there was certainly panic. Not many people sold, though. So we'll jump right into this. So we had 111 new highs versus 757 new lows. 17% advancing versus 80% declining. 71% were below their 50-day moving average. 66% were below their 200-day moving average. The Dow was down at the close 890 points. At one point, the Dow was down over 1,000, like almost 3%. The NASDAQ was at one point down over 5%, or about 5%. We closed down 727 points, or down 4%. The S&P closed down 155 points, or down 2.7%. Bloodbath everywhere, including the Mag 7. Nothing was spared, other than a few safety areas, and we'll cover those. But Microsoft down 3.3%, Nvidia down 5%, Apple 4.8%, Amazon down 2.3%, Google down 4.5%, Meta 4.4%, and Tesla down 15.4%. That is probably the biggest drawdown I've seen on Tesla since like 2020 during like the COVID lockdown. That's not you and me selling Tesla, okay? That's probably, all the folks at Bridgewater who were touting that they bought Q4. Remember those headlines? Yeah, whatever. Let's take a quick look at the sectors. So I'm going to start with the downside because actually, I'll tell you what was green. Utilities up 0.45%. Energy up 0.25%. The rest were all red. Technology down 4.4%. Consumer cyclical down 3.7%. Communication services down 3.3%. Financials 2.7%. Basic materials down 2.25%. Industrials down 1.7%. Healthcare 1.6%. Real estate 1.1%. I mean, it was a bloodbath. I do want to start with, I didn't know where to start, to be quite honest, because everything was red. But I do want to start with MicroStrategies. I penned a piece yesterday on Sunday that the title read, MicroStrategy will crash 80%, but from where? That was the title. I'll link it in the show notes if you haven't read it yet. And I'm not a psychic. I had no insider information. I had no idea that today that they were going to issue a dilutive news where they're selling or issuing more shares to buy more Bitcoin. I mean, it's really a pattern that they've done, right? So that's why I know this is what MicroStrategy does. I'm going to link multiple articles that talk about how MicroStrategy and Michael Saylor dilute shareholders of MSTR to buy Bitcoin. And for those that don't know the plumbing of this. I'm going to try to dumb it down for those that, are not deep into the weeds of the market. They have their retirement and they don't really care about MicroStrategies. But if you're ever curious how to explain this to someone else. So MicroStrategies used to be a tech company that crashed 99% during the dot-com boom bust. They had nothing to do with crypto or Bitcoin because that didn't exist back then. After MicroStrategy crashed almost 100%, they just kind of puttered along, and eventually in 2020, they, as they were starting to increase in price, they switched 100% to being a Bitcoin fund. So their strategy is to raise capital, borrow money, and buy Bitcoin. And as Bitcoin rose, they enjoyed success. Actually, if you look since August of 2020, MicroStrategies is up more than Bitcoin. So think of MicroStrategy as a 5x levered instrument for Bitcoin. Like from that period, I'm going to just estimate here. You could read the post that has the exact numbers. Bitcoin is only up like 760% since that time frame. MicroStrategies is up 3,000% or something like that. Right? So that's a 5x gain on Bitcoin. So that's someone call it a 5x ETF on Bitcoin. But the problem is, and here's the analogy, it's like you own a home without a mortgage. You've paid it off. It's worth $1 million, I don't know, in like Highland Park or Silver Lake in LA or whatever, $1 million apartment in Brooklyn. It's paid off. You know, or you suspect that NVIDIA is going to keep going higher and higher and higher and higher and higher. So you start taking out home equity loans on the equity of your house or home. You buy NVIDIA. NVIDIA keeps going up. You keep going to the bank. You keep pulling out home equity to buy NVIDIA. And over time, because NVIDIA has skyrocketed, the bank is more than willing, more than happy to give you loans in excess of your $1 million equity price. Because you just keep paying the interest. They don't care. So you just keep borrowing off of the asset. They keep lending you the money. You keep diluting your house. And over time, your mortgage on your $1 million house is $10 million. But let's say, as an example, NVIDIA starts to crash or get soft or go down, and housing prices crash, so your home starts to fall. I suspect if Bitcoin cannot get defended here at this very important trend line, and if Bitcoin goes to 60,000, I suspect, just a hypothesis, MicroStrategy and Michael Saylor are going to get the mother of a margin call. And the buyer of last resort, because he is the biggest buyer of Bitcoin right now in the market. When that biggest buyer is forced to sell MicroStrategies to raise money to pay the margin call, or to sell their Bitcoin to raise money on the margin call, you're going to see potentially a spiral in both MicroStrategy and Bitcoin. Because if you turn the biggest buyer into the biggest seller, someone is going to have to step in to replace that buyer of equal or larger size. It's as simple as that. So I'm not saying it's going to happen. I'm just saying watch the price of Bitcoin. If Bitcoin goes further south, be up below 78, 77, 75,000, 60,000, you're going to see havoc on MicroStrategies.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.